What happens if the buyer's loan falls apart? You finally accepted an offer. Your home is pending. You packed boxes. You're already thinking about your next chapter. Then your phone rings. Your agent says the words no seller ever wants to hear. The buyer's loan did not go through. If this has ever happened to you and if you're about to sell, this video can save you thousands of dollars and weeks of stress. Because when a buyer's loan falls apart, everything feels like it's collapsing, but it doesn't have to. In this video, I'll break down why deals fall apart, what happens next, and how to protect yourself so your sale actually closes. Stay until the end. I'm sharing my 3-step seller loan protection plan that keeps my clients safe even when the unexpected happens. Hi, this is Rima Rafeh with the Rafeh Group here with eXp Realty in Santa Clarita Valley, California. Over the years, I've helped hundreds of sellers through smooth transactions and a few that nearly fell apart at the finish line. When deal collapses, it's emotional, but when you understand what's really happening behind the scenes, it becomes manageable. So let's walk through the step-by-step together. Let's start with the big questions. Why do deals even fall apart? Buyers get approved, right? So it should be safe. Not exactly. Pre-approved is not a guarantee. It's a conditional promise. Until the loan closes, there are dozens of ways things can go sideways. Let's break it down. First, credit can change. We talk about credit changes. The buyer gets pre-approved, then go ahead and buys cars or open a credit card or finance furniture. Suddenly, their debt-to-income ratios shifts and the lender cannot lend them the money anymore. Second, job or income changes. They switch jobs. Some buyers switch jobs in between escrow, or maybe their bonus does not count. Even promotion with probation period can stop the funding. Or we can face underwriting surprises. The underwriter finds an undisclosed loan or a large deposit without proof. Anything unclear, they freeze the file. Another thing is low appraisal. If the home appraises under the sale price, the bank won't lend more than that value. If the buyer can't make up the difference, the deal collapses. And sometimes the property does not meet loan guidelines. FHA or VA loans have condition rules. Chip paint, missing rails, roof issues, all can fail inspection. And poor communication. Online lenders, inexperienced loan officers, they miss deadlines. One delay turns into funding failure. So the bottom line, financing is fragile. And you, the seller, need to understand where those cracks can appear. Okay, so the worst has happened. Your buyer's loan fell apart. Now what? Let's go step by step. Step number 1, the buyer's agent notifies your agent escrow is paused immediately. Step 2, escrow requests a denial letter from the lender, proof that the loan cannot close. And step 3, the question becomes what happens to that deposit. If the buyer still had their loan contingency active, they usually get their earnest deposit back. If they already removed it, that deposit might be yours. Step 4, you as a seller and your agent reviews option. Can the buyer switch lenders, or they fix the issue with few days, or we do relist. Sometimes it's fixable and sometimes it's not. So let's talk about your right as a seller. Contracts protects both sides, but timing matters. If contingencies are still open, the buyer walks free. If they remove, you gain leverage. That's why I always tell my sellers, don't let contingencies drag on. Every extra day equals more risks. Loan contingency equals buyer protection. Removal of contingency protects seller. So simple but critical. critical. Now let's focus on prevention, because protecting your deal starts before you accept the offer. And here's are some tips. Number one, verify the lender. Don't assume all lenders are equal. Have your agent call the loan officer directly. Ask questions. Listen for confidence and clarity. Tip number two, demand a real pre-approval, not just a pre-qualification letter. That means documents verified, not just a credit tran and just a simple letter. And tip three, proof of funds. Ask for bank statements confirming the down payment exists. And number four, keep the loan contingency short. 7 to 10 days, not 21. If there's a problem, you will know early. And tip number five, always have a backup offer. Even if it's quiet, it gives you power. And tip number six, weekly lender check-ins. Your listing agent should talk to the lender every week, not just when something goes wrong. These steps sound simple, but they're difference between deal closed and deal collapse. So let's get real for a second. Even with the perfect preparation, things can still fall apart because you cannot control the buyer's job stability. As a seller, you cannot control the underwriter's mood, and definitely you cannot control the market shifts. But what you can control as a seller, how you respond to it. You can control your timelines, you can control your protection. That's the power of knowledge. Sometimes a failing deal can still be saved. Get everyone talking and cooperating. Your agent, the lender, the buyer's agent. Silence kills deals faster than problems. Switch lenders if needed. Local lenders can move quickly where national ones move way slower. And if the issue is renegotiation or appraisal, meet halfway or offer some credit for closing costs or credit buy down. And grant short extension, but only with progress proof. A real lender letter, not promises. And keep your marketing live. Do not disappear from the market until the loan funds. I've had some home close successfully in the second lender just because we stayed proactive. Now let's say the deal is truly over and the loan is dead and the buyer cannot recover or close the loan. So here's what happens next. Escrow cancels. The deposit is released per the contract. You relaunch and you move fast because homes that relist within days, not weeks, regain momentum. Get ready and excited for fresh photos, updated description, clear message that it's back on the market due to buyer's financing, and often, guess what? Your next offer comes faster and stronger. And here's how I protect every seller I work with. Before we accept any offer, I personally speak with the lender. By week 2, I confirm underwriting status directly, and I ask for proof, not just word, of appraisal and final approval. And I always ready for a backup offers. I set the expectation with them tight and with no free extensions. Everything comes with a price. So the system has saved countless deals because it turns reactions into prevention. So let's take a breath and talk about the emotional side. When this happens, it's devastating. We've already envisioned your next home and suddenly everything freezes. It's okay to feel disappointed. It's okay to be angry. But here's what I always remind my clients. Your home did not fail. That buyer was not ready. The right buyer will come and they will close without chaos. This isn't a setback, it's a setup for a smoother, stronger sale. So here's what I want you to take from this. Deals can fall apart, but you're never powerless. Protect yourself with clarity. Work with agents who communicate, and remember, the goal isn't to sell fast, it's to sell smart. When the right buyer shows up, the deal will feel calm and confident and certain. And that's how you know it's the right one. If you're getting ready to sell your home and want to make sure your deal never falls apart, let's talk. Comment escrow below or send me a quick message. I'll send you my seller loan protection checklist, the same one I use with every single seller to make sure their sale stays solid from offer to closing. I'm Rima Rafeh with the Rafeh Group, helping homeowners and protect their biggest investment with confidence. Don't forget to like, subscribe, and share this video with someone thinking of selling, because one small step today could save them a major heartbreak tomorrow. See you on the next one.